Okay, hello everybody, and welcome back to another week of Selfwealth Live, the technical analysis edition. My name's Roger, and I'm from Selfwealth by Syfe. And we have to the left of me Jason McIntosh from Motion Trader, who's had a fresh week off. He's had a week off on the last school holiday week off, obviously. And you're up in the Gold Coast, Jason. How was it all?
Hey Rog, good to be back and talking about some charts with you. And yeah, it was had a good week off. Got plenty of sunshine, which is always a positive when you go up north. That's what we're after. And warmed up a bit, and now here for see off the back end of winter, and things get better. Things move into spring pretty soon. So yeah, I think pretty good all round.
Exactly, and the markets are in tip-top shape at the moment. So obviously you were off when we're hitting all-time highs. So, but I'm sure you're still monitoring everything from your holiday, right? So, welcome everybody on the other side of the line. Welcome our newbies or our existing peeps that have been with us for a long time. We're almost at 2 years, Jace. Almost. Which is great. So if you didn't know what we do, obviously we do run through the Australian, the US, and the Hong Kong markets, which are the three major markets that we offer on Selfwealth by Syfe platform. Obviously, that's what this show is brought to you by. All right. And then if you've got any general questions around technical analysis and price chart analysis, that's what we're here for. That's what this show is about. More around active investing, once again, then please feel free to ask them. Otherwise, the majority of the show is about your tickers. Let's have a look at your tickers from a technical standpoint. Looking forward to another great week here on this Selfwealth Live session. Now, Jace, just quickly before I hand over to everything, obviously you need to your disclaimer, if that's okay, or our disclaimer,
Yes.
sorry, not yours, ours. Yeah.
Yes, so everything today is general commentary only, no personal advice in any of this. And I'll quickly put up that disclaimer, which Rod just mentioned, and that just goes through all that. I'm also not part of Selfwealth or Syfe. I'm Motion Trader. That's my business. You see my details at the top with licensing, etc., and beneath there the Selfwealth licensing and general commentary and all of that is there as well.
Fantastic. Thanks, Jace. Now, I thought I'd just kick this off with a bit of a success story, what I feel is a success story of mine anyway, right? And as I said before, we're just coming off almost 2 years doing this show. And what a lot of people might not know is that I started a bit of a motion trader style portfolio when just before we started the show, a few months before we started the show, as I got to know you, Jason, and whatnot, right? So I've now had that portfolio running for 2 years now, and I'm happy to report that it is sitting at around 36%, I believe, right? Which, if I compare that to the market, which includes dividends, so we have on our platform, we obviously have a comparison of your portfolio versus the market, which includes dividends, the Australian ASX 200 market, including dividends, and that's sitting around 24% for the 2 year period, right? So for me, that to me sort of once again just doesn't prove that it's always going to be that way, because that's only 2 years of data once again, right? So over the long term, that could change. And obviously we all know that past performance doesn't equal future performance, right? But what it does do for me is instill a lot of confidence in a system and a process, and something that, a simple one at that, right? But what resonates to me is that I had to do something above the average once again to achieve above average market results, right? So that to me is my success story, and I just wanted to share that with our viewers. You can go onto my LinkedIn profile, and I've got my post there around that as well, right? So I don't know, Jace, so I just want to say thank you once again. Now, I've got to put that disclaimer in there. Past performance doesn't equal the future, right? We never know what's going to happen. But to me, that is a huge success for me, right? So, yeah.
Yeah, Rog, I think that's terrific. And I think it just shows that market outperformance is possible. It's like we hear from a lot of academics that say, oh, look, you can't outperform the market, but that's just simply wrong. Like the market's an average, and you're going to have above average and you're going to have below average. And it is hard to be above the average. You've got to be doing something I think you've got to have that structured process if you're going to be above the average consistently over time. And of course, there are going to be periods where the market will get in front. But I think if you've got that repeatable, consistent process and you can apply it over years, and you go through market cycles, you go through the good periods, the sideways periods, the down periods, that consistency and that process that's what leads to the outperformance. And then it's really about, for me, it's about quite simple rules. Really, it's the big ones are all about like trading with the trend. So you go with what's working, go with what's going up, let your profits run, cut your losses, spread your risk, and give your profitable trades room to move. It's those 5 core components about bringing them together into a single system. I see lots of people, they might have one or two or three or even 4 parts of that 5-pronged rule-based approach. But I think you really need all 5 to bring the whole thing together and make it work. And it sounds like that's what you've done really well over the last couple of years. It's not everyone can stick to a process. A lot of people get a bit nervous when the market moves against them, which it is going to do. Like we had that big sell-off in February. A lot of people jump ship and go, no, nothing's working. I'm out. I'm going to go do something else. And it's being able to stick to something through the tough times as well. And that's when you put yourself in the ring to potentially do well over time.
Yeah, and look, at the end of the day, the other thing is having the success is in the process and the system, right? It's not necessarily the result at the end, because you might have a disappointing result even after a few years, right? But if you're able to follow that process and that system, one that you kind of know should work, because it's not that I've made it up. And even if you can make a system, that's great as well. But I've sort of lent on the shoulders of yourself as a giant, right? And I thought, all right, there's proof there that these kind of things work, right? So, but being just here on this show every week, and even our viewers, like, I think you got to pride yourself on even that as part of the system or the process that is above average. Because at the end of the day, how many people are on these shows every week in, week out, just trying to improve themselves or trying to get better? Doing this show every week is above average, and that's part of my above average, right? So I've really appreciated it. We haven't got to that 2-year mark, so we will celebrate that anniversary very soon, Jace. But really appreciate being here and hopefully being able to help all our viewers, together with yourself, obviously, over that time, right? So anyway, let's get on with the show. Fantastic. I just wanted to quickly mention that as a bit of a success, and hopefully I can inspire a few others here, you with yourself here, Jace. Hello, everybody, once again. Let's get onto that Aussie market. It has gone into all-time high territory. So let's have a look.
So let's jump over the charts, Rog, and starting with the ASX 200. And as you say, it's a new all-time high for the ASX 200. That was last week, and it's also a clean break above the June peak and also the February peaks, and that follows on after 5 weeks of sideways trading, and you can see that. So the market hit a high in June, and then we had 5 weeks of sideways as the moving averages had a chance to catch up, and so that consolidation along the moving averages. Just looking at the consolidation, it's also interesting to see how that played out, because what's interesting here is that it was shallow. It wasn't a deep pullback towards the 100-day moving average. Didn't even get back to the 50-day moving average. They're the averages I've got on the chart, the 50-day and the 100-day. So it was a shallow consolidation, and that's, for me, that's often a sign that there's buying interest, and there continues to be that buy the dip mentality in this market, and that's why the dip is shallow, because there's that interest there to pick up stock on the mildest of pullbacks. So for me, that points to the path of least resistance being to the upside. I think an important factor with this most recent breakout is that it's also been confirmed by when we look at the ASX 200 on an equal weight basis. So what we're looking at here is the ASX 200. So the biggest stocks have the most influence. So CBA has been a real leader of the market in recent times, and it pulls the market higher. So then when you look at the equal weight, and a stock like CBA only has one out of 200 influence, you get a picture of what the broader market's doing. So let's just jump over to that. And what we have when we look at the ASX 200 on an equal weight basis, it's also hitting new highs, new all-time highs, just like the market capitalization index. So I think that's a real positive. It's what that tells us is there's broad participation in this move, and you can see it's the high from January 2022. You got these previous peaks from late last year and early this year, and now we've got this clean break. So it's a lot of stocks are participating. It's not just CBA or a few other large caps pulling the market higher. It's a broad-based market move, and broad-based moves are often a sign of a healthy market. What's been interesting is that all year I've heard people say that they're going to sit this year out. And I remember one email I got. I got an email from a guy. It was probably around late March, early April, and he told me that he said, "Look, I sold all my stocks in mid February, so he's out somewhere near the highs. And as the market's down here in April, he was seemingly feeling pretty good about himself, saying, "Well, we just saw trouble coming, and we're in a 12-month term deposit. We're going to sit this year out." And well, as you can see, the market's now above where it was in February, and the price action is telling us that I don't want to be sitting this year out at the moment. I want to be monitoring the price action and making decisions as the price action unfolds. And at the moment, we do have a rising trend, and that path of least resistance is to the upside. And if we just go through a checklist of what we know at the moment, firstly, we've got rising moving averages. So 50 and the 100-day moving averages trending higher. Prices are also established above the 50-day moving average. So prices first got above the 50-day average in May. So that's about 3 months of being above the moving averages. So that's positive. That's a market being established above rising moving averages. So it's not like what we saw back in 2023, where price was just oscillating either side of the moving averages. So it's not established above the moving averages, and that's that point. It's like a sideways market. This isn't a sideways market. It's an upward trending market. Looking at the situation now, as I said, prices have been above this 50-day moving average for about 3 months. And this is the longest prices have been above the moving averages since, the last time prices had flipped to the positive side of the averages and had been above the averages for this long. It was back down here in December 23, and who knows how this time will play out. But that was the start of quite a big upswing in the market, which continued on for some time. So I think those things are all shaping up as positives for the market. And we also know that the dips are being actively bought, and we've seen this the whole way up, that each pullback has been shallow and hasn't lasted too long, and prices have moved upwards. Just quickly coming back to the ASX 200, as I said a little earlier ago, I think the path of least resistance is up. So I don't want to be sitting this out and hoping for a pullback. I want to be involved. I think it's a case of being positioned with the momentum, and I think that's how we put the odds in our favour. Yes, there's going to be more pullbacks along the line, but that overall movement is to the upside. I think the structure is positive, and I think it's about looking for opportunities to participate, not reasons to stay out. So I'm long the index, I'm long the individual stocks, happy to stay that way. But then, as always, I'm using those wide trailing stops. And what they do, they give the market room to move because they're wide. So it helps me see off pullbacks when they occur. And when the market does ultimately have a larger correction, it gives me an exit point. But for now, what they're doing is they're helping me stay on this overall upward move.
And just on that, once again, on that point alone around wide trailing stops, and most of these, some of these are going to get hit, right? If I think of my portfolio over those 2-year period, I did 82 trades. And it's about even buys and sells, right? So which mean I sold out 42 times. So that's probably a good result, right? Because it's not more losers than winners, but generally in these systems you're going to have more losers, right? So but the winners are there to trump the losers, hopefully. So
yeah, and I think this is a misconception a lot of people have. A lot of people think it's all about having a high win rate. And that makes sense. You think if you're going to make money, you should be right more often than you're wrong. Intuitively, that's how you'd think. And this is the funny thing with making money in markets. What's intuitive in everyday life doesn't always translate to the market. The way it is for many active investors is that they'll be wrong more than they're right. And that's okay because we use things like a stop loss to mean that when we're wrong, we're not too wrong. We're only hopefully a little bit wrong. And when we're right, because we let profits run, we can potentially be a lot right. So if you lose a little, say 55% of the time, and you make a lot when you're right within that 45% of the time, or whatever the numbers happen to be, you can really make a lot of money. So it's not about being right all the time, but when you're right, you want to maximize it and not cap your upside by being quick to take small profits, take small losses, but give profits a chance to be everything they can be. Give profits a chance to be big profits. And but a lot of people do it the other way around. They take large losses because they don't want to sell when a stock's in a loss, because they say that crystallizes my loss when I sell. So I don't want to sell a small loss. I'll hold it. So they end up with large losses a lot of the time. And they cap their upside by taking small profits. So you got to flip it, do it the other way. That's how the money's mostly made by those who do well.
All right, thanks for that. Speaking of a trending market, obviously the US is another one. So let's have a look.
Yeah, so S&P 500. So a new all-time high just on Monday. So overnight for us on Monday, new all-time high for the S&P 500, and that follows the briefest of dips last week. That was quickly bought, and prices again turned higher, and that's been the theme. The dips are being bought, just like we discussed with the ASX 200, and we've discussed this many times over the last couple of months. This is a market that money still seems to be looking for a way into. It's not an environment where the rallies are being sold, like we saw during the 2022 bear market. So the rallies were being often sold. So the markets would go up and then they'd quickly sell off, go up and then quickly sell off. That's not what we're seeing here. We're seeing the market rally. It comes off, finds support, and turns higher again. So it's a market which money is looking for a pathway into. As it stands, I think this is clearly a primary uptrend in stocks. Price is established above the moving averages. So again, the 50 and the 100-day moving averages, and those key averages are rising. From a participation perspective, there has been some divergence over the last week. So you can see here the S&P 500 is making new highs. When we look at the S&P 500 on an equal weighted basis, you see it hasn't made new highs over the last week. So there is a little bit of divergence there. So I don't think this is a great concern at this stage, and it's certainly not a reason to sell. But I think it's worth being aware of, particularly from a new funds perspective, because maybe it's a sign that the market does need to have a little bit more of a pause before really being able to push on. And that wouldn't surprise at all if we did see this consolidation towards the moving averages maybe play out for for several weeks or in the near term. So just something to be in mind of. The equal weight isn't keeping up with the market cap S&P 500 at this point. Just coming back to the S&P 500, we've talked a lot about going. We've talked a lot about going with this rally over the last few months. I think that remains the play. My strategy has been for again using those wide trailing stops to try and see off any potential pullbacks, and with the aim of trying to stay on what appears to be an overall upward trend.
Okay, fantastic. And let's have a look at the Hong Kong one as well, then, please.
Yeah, so Hang Seng is up to a new high for recent times. So it's not an all time high. That's way back in earlier years, but nonetheless, it's a new what would it be? It's its highest level since around 22. So around what would that be? Almost a 3.5 year high for the Hang Seng. So we've got this series of rising lows, rising highs. I think it's a market which is looking to move higher, rising moving averages. So the building blocks of an upward trend are very much there. So it's a trend I'd be happy to go with. And when we come over and look at China, it's an interesting situation that's happening here. So again, we've got this series of rising lows, and it seems to be setting up for. I think it's setting up for higher levels. The moving averages are slowly rising. It's been very much a sideways market since October last year, but does look to be on the verge of a break higher. A couple of weeks ago, we were talking about these peaks from March and May, and also June. Started to get through there late last week. Oh, well, the week before. So what, about 8 days ago? Started to get through. Then it's come back towards the averages, but it's generally holding on to most of its gains. It's holding on to most of its most recent rally, which is a positive sign, because what we've dealt with over the last 6 or so months is rallies that have quickly come back and not gone anywhere. So this one looks to be building. A break above the high from the 11th of July, so Friday, a week and a half ago or so, that would be another sign that momentum's gathering. It's a market I'm watching closely, and I think it's worth considering a potential investment in it. It's we do seem to be gathering some momentum.
Okay. All right. Fantastic. Good to hear. All positive around the indices. Let's start getting onto our tickers. We've got plenty to go through, Jace. First one is from Rose. Rose wants us to look at LTR to start off with, please.
So a lithium plane. Lithium's been on the move, and so this is giving the setup for an uptrend. We've got a series of rising lows. Some moving averages have turned. Prices broken to new highs from recent price action over the last year or so. If I was on this, I'd be happy to stay on this. I'd be giving a nice wide trailing stop, probably back below the 100-day moving average, and see whether this develops into something. And we're seeing this momentum across the lithium market generally. Look, this could be a significant turning point, and it could lead to a significant trend. You can never be sure. Sometimes we get these promising moves that don't go anywhere, but I'd be giving this the benefit of the doubt and going with it. It has become a bit stretched from the 50-day moving average at the moment. But even still, even at current levels, it could be bought at current levels with like I'm looking at this low point from the 17th of July and using that maybe as a potential stop, a stop loss. So having a stop below that that recent low point. So the 50-day moving average will quickly be above that. So that's around 22% from current levels. So I think that's good risk reward still. Even risking 22% for a stock which could potentially double or more if it gets going. Alternatively, just waiting and seeing whether it gets some sideways consolidation and potentially looking at an entry point then. But yeah, it's really, really interesting play at the moment.
Yeah, I think once again, the question is now when you get these kind of stocks in a sector such as lithium, or you've got CXO as well, which is the second one from Rose, but it's a similar position, right? So it's another CXO. So I guess the question for most people is which one do you take, right? So yeah.
So it's like, maybe it's a case of
CXO.
CXO. Maybe it's a case of like trying to spread risk across a few different stocks, because one you could find one goes a whole lot better than others. So it's like it's frustrating to get the right idea and be on the wrong stock. So that's why maybe it's worth considering 2 or 3 or 4 plays within a sector, providing it you don't I don't want my portfolio to become heavily concentrated in one segment of the market, because that can bring a whole lot of negative volatility if things don't work out. But rather than having one big bet on one sector play, like a favorite gold stock or a favorite lithium stock or a favorite whatever it may be stock, having a few different plays. So hopefully they all work, but maybe one will work better than others. So looking at CXO, like its price action doesn't look as good as LTR at this point. It's still got the moving averages of cross. Price has gone from below to above. We've had a consolidation into the moving averages, another rally. So it all looks good. Just LTR looks like there's stronger initial momentum. So that could be a sign that there's going to be like a stronger underlying trend develop. But we don't know. So I'd be I think this is doing enough at the moment to say, look, this is worth a look in. The most recent price action has rallied off the moving averages, has gone sideways and started to break higher again. It's come back today, but look, it could be bought at current levels with a stop, say, back below the 100-day moving average, probably around maybe 25%. Would be, for me, I think, giving it enough room to move around if it's not ready to quite go yet. So giving it room to move around whilst hopefully staying in. But then if it goes, well, off and away, and that's great. So, again, an interesting setup in CXO, and I think would find that broadly across a lot of lithium plays at the moment.
All right, fantastic. Jennifer got a signal for CHN today, and she bought, and it's heading north.
Yeah, so another one. This is a rare earths, and they've got some copper. It's like an interesting stock, and it's moving averages crossed. It's been a recent motion trader signal. It's it's got the makings of a trend. So a stock can have the makings of a trend, but then not deliver. It doesn't mean it's going to fly and double or whatever it may do. But the building blocks are there. We're above rising moving averages, rising lows, rising highs, and risk can be managed. So at current levels, you just say, look, what would a stop be back below the, maybe, again, you can probably working around that 25% sort of level to see whether it can get some momentum. But very much an asymmetric opportunity in that the upside potential, I think, is significantly greater than than maybe a 25% stop loss. Of course, doesn't mean it's going to work out, but you keep playing where it appears the odds are in your favour and the risk and the reward appears to be greater than the risk, and over time, that's how you tend to get that outperformance.
Of course. All right, now we're going to go to the opposite. And Mike is a new member of yours, I believe. He's asking about the reasoning behind SHV being stopped out yesterday, being a big motion portfolio. I don't expect an almost 35% drop from the high before the stop loss.
It's yeah. Well, look, we had a there was a breakout in this stock in February. A whole lot of previous highs had been oscillating either side of the moving averages, so it looked like there's a bit of a base forming. Had we been looking at this stock just what was that? Just a couple of months ago, I would have been saying, look, this is looking good. We've got a breakout, rising moving averages, prices making new highs. That's a sort of opportunity which I'd be talking about in the same sort of way I was talking about the lithium stocks. We've got rising lows, rising highs. It's looking good. But as I said with the lithium stocks, just because we've got the makings of a trend doesn't mean we're going to get a trend. And that's been the case in this. It was a motion trader signal, but it's then now just completely given way. It's back below the moving averages. Moving averages have crossed. It hasn't played out, and this is going to happen. This is why my process is about many relatively small trades. Because we don't know which setups are going to deliver. We don't know which breakouts are going to run a long way and which breakouts are going to fail. And this one has failed. So I use a wide initial stop loss, and the motion trader stop losses are generally around 25% for the initial stop. And the idea is to give them room to move about. And it's a calculation. It's applied consistently. If it's too wide a stop for someone, people can always make it a little bit tighter. But you've got to give them a bit of. I think you've got to give these stocks a bit of room to move. Otherwise, you do like the idea is like you get a breakout and then look at this volatility we saw in April. So the wide initial stop helped see off this April decline. Price started to rally again, but it didn't continue on. So look, it's losses are part of the process, and I know people want to have 5% or 10% losses at the maximum, but it does become hard to. Um, the closer your stops, also the more turnover you tend to have because you end up having a lot more trades because you're being stopped out more frequently. So wide stops do a couple of things. They help reduce turnover and they help see off more wider consolidations. But the flip side, the cost of it is when you are wrong, you lose more. But everything's balanced in trading. There's no best, most optimal way to get everything just right. It's going to be these situations that we need to manage, and many relatively small trades. So when they do go wrong, it shouldn't be that big a deal.
Yeah. All right. Let's move on to Kirby's. So we've got C79, please.
Yeah, look, there's the makings of something here. I like that it's gone from below the averages to above. We've got sideways price action along the moving averages. The moving averages have turned. It looks like it's on the verge of trying to punch higher. I'd be happy in this stock if I was already in. If I wasn't in, I could consider it at current levels, or I could wait and see whether we get a break higher and buy on the breakout. A few different ways of playing it from a risk perspective. I'm probably looking at maybe these recent lows from around June. So that's probably maybe like 15% could be one way to approach that. Of course, stop could be wider again, but I'm just sort of give like when we talk through here, I'm probably trying to talk about it maybe a more aggressive initial stop. But if a stock gets going, well, then I default back to the motion trader calculated trailing stops, which are wide. We're talking 25% plus for the trailing stop. And I think they're essential for staying on large trends. But yeah, look, it'd be interesting with this one. Is this a turnaround developing? It's an interesting setup. I think it's a prospective setup that I'd very much consider being a part of.
Okay, next one, BUG.
Sorry, what was that, Rog?
DUG.
BUG?
D for Doug.
Oh, sorry, Doug. Yep. Haven't seen this one for a while, so that'll be interesting. Yeah. So is it staging a turnaround? It was a great trend following stock through 2023, 2024. I had this stock myself, did really well from it. I got out and hit the motion traded trailing stop loss somewhere around September last year, and it's been off the radar for a while because then it went into a downward trending phase below declining moving averages. So when that's the case, there's nothing for me to see there, so it goes off my radar. So hence when I say I hadn't seen what it had done for a while, and that's why I didn't know what it had done because I hadn't been watching it because it was in a downtrend. Now we're in a situation where maybe that trend is starting to swing around. It's not quite there yet. The moving averages have swung around just. So what this would need for me to trigger a signal would be a break above the July high. And that could be coming. If I was in this stock already, well, I'd be inclined to stay in and see whether it gets that further upward momentum. It could also be considered as a buy. Like, do you buy this dip back to the moving averages? For anyone who likes it, who wants to get in earlier, maybe that's a play as well. I think this is I wouldn't quite say the path of least resistance is upwards yet, but it seems to be developing that way. A series of rising lows, rising highs, above the moving averages. It's shaping up as a potential play.
All right, fantastic. Kirby, I'm going to do two for everyone here because there's quite a few. So since we're all here, we've got to try and get through them. If I've got time, we'll circle back to the third. Let's get on to Drew's, please. ARGT, please. Must be an American stock.
So an Argentina ETF would be interesting. Yeah, it's and what's also interesting with this is Argentina has had all sorts of economic issues over the last decade, but look at how its stock market has performed over the last what 1, 2, 3 over the last 3 years. Has gone from this ETF's gone from 23 to 79. So yeah, don't. I think the lesson from that is don't read the newspaper headlines and decide, okay, a market is this is where I want to be or this is where I shouldn't be. Look at the price action, see what the price action is telling you. Because despite the economic problems and that within the country, it's been a booming stock market. Why? I couldn't tell you, but the price trend has been very much up. As for here and now, well, it's pulling back and it's below the moving averages. So that's in itself not a reason to get out. If I'd been on this trend, I'd still be staying on it and just giving it plenty of room to move around because you can see these other periods where it does come below the moving averages. The moving averages are close to crossing as they did back here in 23. That becomes a warning sign. So what I wouldn't want to see now would be price action where it starts to stall below the moving averages. The moving averages continue to roll over. Price goes sideways, and then that sets up the vulnerability of a move down. We don't have this price action yet. This is what I'd be looking out for. That's what would concern me if we saw that, and if we got a secondary break lower. Depending on why I was holding the ETF, if it was a long-term hold, maybe it'd be a different situation. If it was more of a medium-term tactical play, well, then I might look to close it out. It depend what my goals and thinking were. At the moment, it's just one to be. I wouldn't buy this dip at the moment. I want to buy it on the good side of the moving averages, not beneath the moving averages. We want to monitor this one, but it could, as we've seen in the past, it could be relatively brief, stay below the averages, maybe several months, and then uptrend resumes. At the moment, I'd say the trend is still up.
All right, SLX, please.
Yeah, potentially something developing here. It's back above the averages. You can see the averages have turned about to cross. So we've really got some consolidation happening around the moving averages. I'd watch this a little bit longer. Do we get some more sideways, and following that, do we get a breakout? I'd just like, whether it plays out like this, I don't know, but that's the sort of price action which can give us a good entry point if it does turn out like that. But that would require probably a little bit more price action. There may be a little bit more time while the averages cross, more sideways. And then if we get a breakout, that would be the trigger for me. At the moment, I'd just watch this one. If I'd already bought some at a lower level, well, great. I'd be inclined to stay in it and see whether this turnaround continues to develop. But if I wasn't in, I'd probably be happy to watch a little bit longer and see if it does stabilise above the averages and then get the breakout.
All right, fantastic. BHP, please.
Is this the turnaround? Been waiting for this for a long time. So it's now above the averages, and the averages are getting close to crossing. Now, we had something similar occur back in late 24. Market didn't go on with it, came back down. This resistance point I've got along here around $42. You could also just extend that out and say, look, at the moment, it's quickly gone from below to above the moving averages and is heading towards the resistance point. So I'd be inclined, if I wasn't in, I'd be inclined not to buy at this point, but just see what the next consolidation looks like. And if we get some sideways price action while the moving averages cross and turn higher, it could then start to set up for an entry point. If I'd already bought some, well, I'd be inclined to then hang on and see where this goes. It's quite possible that we do get a big turn, I think, in these commodity plays. Just looking at what some of these commodities are doing, looking at what the copper price is doing, which BHP has a large exposure to. Then there's gold and silver, platinum, palladium. We're seeing a lot of really interesting price action and bullish price action across the commodity space. So maybe this is the turning point for the BHP and a number of the other commodity plays. It's a stock which I think could do really well if we get that turnaround. And I think maybe this is it. Although I'm just wary of not getting caught in a situation like we had in October last year, where it's looking like it could be a goer, but then the dip isn't bought. So what's the next dip look like? Is the next dip supported? Does the next dip look like this, where it's clearly being supported, followed by a breakout? Or is it more like what we saw last October, where it then quickly gives way, there's no buying, and it just goes back into the downtrend? I'm optimistic towards it. I'd like to see a little bit more price action before pulling the trigger on it.
Okay, fantastic. We've got Devendra who wants us to look at EOS, please.
Up and away. Well, it just shows when stocks break higher, some of them can really run a long way. Again, this is why we have many relatively small trades. It's like just looking at like what we would have had in May. It's like, well, this is a breakout. Let's see where it goes. Moving averages are crossing. But who knows is going to do that? That's why we spread our risk and we see which ones run. And when they run, let them run. If I was in this one, I'd still be holding it. I'd still be letting it run. I'd have the wide trailing stop, because you need to be able to see off these pullbacks along the way. Just out of interest, what's that? That's a 24% pullback. So if you're someone who likes to set a 15% or 20% trailing stop, you're going to get knocked out and you're not going to be in there now. So wide trailing stops, at least below the 50, preferably for me below the 100-day moving average. Yes, it gives it a lot of room to move, but that's often what's required with these stocks for staying on larger trends. I'd struggle to buy it at current levels just because it is so stretched above the 50-day moving average, but I'd be very happy holding on.
Okay, next one's DRO.
very similar to what we were just talking about with EOS. It's we've mentioned this. We've talked about this a number of times over the last couple of months. We've seen this emerging trend develop, and it's now a case of, had someone bought when we were discussing the potential for an emerging trend, it'd now be a case for me of holding on, seeing where it goes. I wouldn't be a buyer at current levels simply because it's just too stretched above the moving averages, and that does increase the potential for, or the prospects for a larger consolidation. Even if it's just volatile sideways while the moving averages catch up. For me, this is one to let run, not one to buy. It's just too far above the averages. It's not asymmetric anymore. When you think like how much you got to risk to potentially get on this trend, it's like it messes up the upside downside equation for me. So it could go a lot higher, or it could peak out now. We don't know. So let profits run, see where they go. Wide trailing stop, hold on for as long as possible.
All right, fantastic. Thank you. Jesse, let's start off with his ILT, please.
Not enough going on from a trending perspective just at the moment. It looked like something might have been going on in April, so we had a break higher. And this is like these lower price stocks. Look, any stock's prone to a false breakout. But at the moment, the initial momentum that we were seeing in April hasn't continued. It's pulled back. It's now, like, could this stock still rally? Yes, it certainly could. But as we often discuss, not every breakout leads to success, and many breakouts will fail. That's why we have a stop loss. So an initial motion trader stop loss on this would still be further away. I would suspect. Where would it be? No, maybe it would have even triggered an initial motion trader stop. Look, if I wasn't in this one, I'd leave it. I'd be leaving it alone at the moment until we got more signs of momentum. If I was in, I'd be thinking about, look, where's my exit point? Because I don't want to continue. If it does completely fail and just continue to unwind, I want to have an out. Otherwise, I end up with a stock where I'm down 50 or 60%. I don't want that. We don't have upward momentum at the moment, so not buying. And I'd be just thinking through where I'll be getting out if it continues not to work. I'd certainly be aware of this low from early July. Below there, it's really then got price action below declining moving averages, and for me would become a problem.
All right, NVX, please.
Yeah, it's been down and out for quite a while, but now we've had this rapid reversal from below the averages to above. I'd leave it for a little bit if I was looking at this. Moving averages haven't crossed and turned higher yet, and maybe they won't. Like, look at what happened back in December last year. Quick move from below the averages to above, and then it gave way and continued lower. I'd want to see what the next pullback looks like. And if we get that sideways price action while the moving averages cross and turn higher, then maybe it is a real deal. Maybe there is a turnaround going on. But if, like we saw in January early this year, if the initial rise gives way to a rapid pullback and there's no buying of the dip or no apparent buying of the dip, well, then I don't want to get involved. So that's why I'd say I'd probably just watch this one for the time being. There have been a few occasions where it looked like maybe things were turning and it hasn't turned. So it could be turning, or there's not. I don't think we have enough price action yet to make a call on this one. So I'd just continue watching for now.
Okay, fantastic. Rajan wants us to look at DY6, please. DY6.
Yeah, I'd be will be a hard one to buy given it's stretched above the averages, and it looks like it's already had that big run. It's pulling back now. But if I was in it, I think I'd be hanging on to it, wide trailing stop, see if it can find support and turn into something larger. And there were the signs were there below the moving averages to above the averages crossed. We got the sideways into the moving averages, and then we got another breakout in early July. So for now, it's a case of if I was in it, I'd be holding it. If I wasn't in it, I'd struggle to buy it at current levels, just because the where do you put your stop loss? Back down near the 100-day moving average. You're looking at like a 50% decline, or 50% back to there. It's too big a stop. And if I just pick 20% or something here, it's like there's every chance it could get volatility, could just knock me out, and then continue upwards. So I'd leave it alone if I wasn't in it.
Okay. Lloyd, we'll start with MAH, please.
Yeah, so a bit of a delay in getting this to load up. Let's just try that again.
Maybe we'll try GWA.
Let's just see. We'll come back to MAH hopefully in a moment. We'll try. Let's just try MAH again in a moment. GWA, it's been in this long sideways consolidation for, how long has that been? A good year, a bit over a year. Like look at this rally from October 23, big rally, and now the pullback and the consolidation. Got a false break lower in April. It's quickly come back. It needs the trigger on the upside for me. Like if I'd bought at an earlier time at some of these other potential breakouts that hadn't gone on, I probably would have closed this out through my time exit. It's just like it just hasn't progressed in within my time frame. So I probably wouldn't be holding this at the moment. But look, I think maybe I'd be watching these recent highs. So a break above these series of highs would probably be the trigger to say, look, this is worth another go. It's above the moving averages, but it needs that break to the upside to get some momentum going. So I'd be inclined just to watch this one for now. If I was in it, I could, look, there's nothing wrong with continuing to hold it. Probably a stop level, an exit point would be like looking at these June lows. Probably a reasonable exit point. If it can hold above these moving averages and then break to the top side, that would be probably the entry trigger for me.
All right.
MAH. Let's just
MAH
back. Here we go. What do we have here? So, look, I'm just a bit neutral on this at the moment because this has been such a large pullback. We had a great trending period, then we had the big pullback, and it really hasn't gotten going with much momentum since the April low. Look, if I had this earlier, I would have been stopped out on this pullback. That's big enough to take out my wide trailing stop, and I don't have enough structure here to say, look, I want to get back in at the moment. If it holds around where it currently is and starts to break above these recent highs, maybe something starts to develop. But at the moment, it's not trending. I don't see enough there to suggest that a new trend is coming in the near term. It's not to say it can't happen, but we just don't have that clean structure that we sometimes get that can hint towards an upcoming trend.
Okay. Elders?
ELD, that the one?
I would say it's that one,
yeah. Look, this has just been downtrending for quite a while. I wouldn't be in this one. And I think it's too early to be looking to buy it. Yes, there could be a base forming, but it's only just just nudged above the moving averages, which are still in a negative position. So the 50-day moving average is below the 100. I want to see the short moving average get above the long moving average. I want to see the moving averages cross. Like, when you get a cross, that's where I'll consider it. I'd just be leaving elders alone at the moment. It needs more price. Maybe there could be a base forming, but there's not enough price action yet for me to say, look, I want to take a position. Yeah. At best, I think this is just a watch for now.
Okay. JG, we had a look at LTR and CHN at the start of the period where we do our tickers for about the midway mark. So scroll back to there if you have to look at those two. But let's have a look at K and B for you.
KMB?
N for Nelly.
Yeah, the volatility of these smaller stocks. Like I would have been stopped out had I been in on the initial move. If we'd been looking at it back here, as I've said to a few other stocks today, I would have said, look, I'd be staying on board, seeing where it goes, wide trailing stop back towards the 100-day moving average, and my stop would have triggered. So I would have been out, and I wouldn't be getting back in at this stage. I don't like the sharpness of the pullback. The dip wasn't bought on the way down. And at the moment, really, it just looks like it's just a rebound to the previous decline. There's nothing clear here for me to go off. It's not to say that it can't go higher, but it's like I want to play where I can see a clear structure that I can manage risk around. And of course, other stocks which don't have a clear structure can still perform well. But if I don't feel I can manage the risk around it, I typically just say, look, I'll just leave that one alone, and I'll focus where the setup looks clearest. Unfortunately, I just don't really see a clear setup here. So, yeah, I would have given it a go, and I would have now been out, and I'd probably just be staying out for now.
Yeah, fantastic. DB is watching us from this hot and wet Bangkok. Let's have a look at his, which is COL, Coles, please. Hitting a 60-day time limit, doing nothing.
Well, it's been in an uptrend. It's been in a strong uptrend for. It's been in a good uptrend since 24. So this would be a motion trader stock. It'll be in the motion trader portfolio, and the wide trailing stop will be keeping this in at this point. I'd imagine. Like, what's that? That's only a 10% pullback. So the motion trader stop is going to be somewhat below there. Like, is this any different to what we saw in March or what we saw in November last year? It's potentially the same sort of thing where we've had a big rally, had a pullback, big rally, pullback, big rally, pullback. I think the trend, I'd be inclined to say the upward trend is still in place. What would change that would potentially be if we started to get more price action on the downside. We don't see a rebound, and then from there we get a secondary break, but we don't have that price action yet. If we start to see this sideways below declining moving averages, well then the red warning light comes on. But at the moment, I'd give it the benefit of the doubt and say, look, this probability probably favours. It's like what we've seen before, pullback. You can probably just put some Fibonacci's onto the most recent rally, and it's just come back to the 50% range. So you get the low point and the high point, and Fibonacci retracements. It's like a percentage retracements that a lot of traders will look at. And you can see the shaded zone. You can just look it up on Google to get more information. The shaded zone's the within the range. So it's just at this point a classic retracement. If it were me, I'd be patient with it, let it sit there, continue to collect the dividends, and see if it continues to extend higher in time. when I talk about a time limit, it's a time limit on initial positions. It's not a time limit on established positions. So if I bought down here in May 2024, I've got no time limit on this rally, on this pullback. I'm happy to sit there for as long as need be, collect the dividends. If I get stopped out, I'm out. But if it stays above the stop, I stay in and give myself the chance of riding a further extension in the trend.
All right, fantastic. Thanks. Kirby makes a point of XSO, which is the Small Ordinaries Index. Obviously, a great example of broader participation on the market, as you always say at the start there, Jace. But let's have a look at K. K's wants us to look at NUTX. It's had a large gains, and I've been waiting for a good entry point, but I'm wondering if the trend is coming to an end.
Look, it's too early to say the trend is coming to an end. It's because it's come back to the 100-day moving average. It's consolidating. Look, I don't like the sharp pullback, but that's not a game breaker on its own, because it had been a long and extended run that just maybe got ahead of itself. It's come back to the moving averages. It's consolidating. I don't. So, like, if I was going to buy the dip, like where you get the pullback to the moving averages, like looking at this sort of price action where it hasn't been an abrupt sell-off, it's like gradually ground its way back to the moving averages. It's chopping around the moving averages. Yeah, maybe I'd consider buying the dip on that occasion. Same. Maybe the price action from late 24 as well. Maybe you can consider buying the dip. This one here is that abrupt fall. It's got lower lows, so maybe it's a sign that it's not being bought like it has in the past. I'd be inclined not to buy the dip. If I wasn't in it, I'd just continue watching it. It probably needs to break out above the July high, just get some momentum back in the stock, and then look at it, see if it's presenting well. At this point, I don't think there's a hurry to get involved.
Okay. All right. So I'll just let you know, Jace, we've got at least 20 to go through, right? So I'm giving you a challenge here, and that's about a minute a stock at this point, right? So,
right. Okay.
All right. Let's get going. Ben R is looking at AMA.
At this stage, I'd be looking at this as a pullback within a rising trend. It's just back between the moving averages. It had a good run. This is like it's almost a sideways consolidation, wide trailing stop below the 100-day moving average. See if this extends. If I was looking to buy the dip, maybe I'd like to see a bit of a rally first, and then subsequent pullback being supported, and then look at an entry point. But if I was holding it, I'd happy to stay on board.
All right, fantastic. ERD, one that was brought up before, we didn't get to it, but let's have a look at it now, please.
Yeah, well, really got that got stretched above the moving averages, but now got the pullback to the 50-day. If I was on this one, I'd stay on it. If I wasn't and I was thinking about it, I'd probably like to see a bit of a rebound off the moving averages to say, okay, there's some momentum returning. Otherwise, like buying it now, there's nothing to say, we're not going to see this continue to sort of like give way and give back a lot of those gains. So I'd probably like to see a bit of momentum coming in to take a position. But if I was already in it, I'd be prepared to give it a bit more room. I'd be prepared to give it quite a bit more room, really, back towards $1 probably, before I'd say, look, it's just continues to give way. It's back below the averages. I'd be out. But there's certainly potential here for this to to push higher still. So I'd be happy going with it if I was in it.
Good, good. SXE from Rob.
Sideways consolidation persists. I do like we've got these continues to have rising lows, and the top is pretty much fixed. So it's sort of like it's not quite not quite like there's you can see like we've got the rising lows and we've got the flat or the supply that comes in at around $1 $93. They call this, a technical term for this is an upward sloping triangle. I've forgotten the actually a better name for it, but it's so long since I've read the classic books on this. But the theory is that the buyers keep raising their bids, hence you got the rising lows, and the sellers are just unloading at the highs, and eventually the sellers will run out of supply, and the price will break to the top side as the buyers keep raising their bids. That's the theory behind this type of broad structure. Whether it plays out here, I don't know. But if I was in this, I'd be happy to stay in it. If I was looking to buy a position, I'd just probably want to see that break above the May high, go with a bit of momentum. But I do like that we do have rising lows in it. My stop would be back down $1.50 or below $1.50 somewhere, giving it plenty of room to move about.
Okay. Probably a rising wedge, like WBT.
Rising wedge would be bearish. That's a different structure.
What's the opposite of that? Right.
So we probably wouldn't want to buy a rising wedge. But yeah, we can talk about old school technical patterns another day, because I know we're on the clock at the moment, Rob.
WBT.
What was that code?
WBT.
WBT. Maybe there's something developing a little bit too early. We've talked about structures like this already. I'd like to see how had this initial rally from below to above the averages. Now I want to see what the next consolidation looks like. Is it sideways along the moving averages, which would be positive, followed by a breakout, which would be a potential entry trigger? If I'd bought early, fine. I'd stay on board, see where this goes. If I was thinking about it, I'd be inclined to watch it for a little bit and just see whether we get see whether the next pullback is well supported. Maybe there's something developing here. It's a volatile sort of stock, and we've seen false starts before that don't go anywhere. So for me, I'd consider buying a secondary breakout. Well worth keeping an eye on.
Okay, CCA. Sorry, from Evangeline.
Yeah, it's I find it a bit of a tricky one. It's like, yes, there's momentum there at the moment. It's not one which it's been a tough one to get on. It's also a thinly traded stock. I can tell by the way the price action is. There's lots of dots and dashes and stuff. That's a sign of thin trading. If I was on this and I was on that initial gap higher, well, that's great. I'd ride it and see whether it goes somewhere. But if I was thinking of getting on, I'd probably want to see, is this stretched above the 50-day moving average? Do we get some consolidation sideways, and is that consolidation supported? Or is it like the earlier spike we saw in July, where it rallied quickly and then just gave it all back quickly? The key here is, can it hold on to its gains? Does it find support at a higher level, and then from there start to lift off again? So I'd like to see some more price action with it. I wouldn't buy it at this point if I wasn't already in.
Okay, Hassan wants us to look at EUR, please.
Yeah, maybe this is, it's lithium. We're seeing this broadly across the sector. I'd be happy staying in this if I got in early. And we had some signs of breaking higher earlier in the month, little pullback, rally again. If I wasn't in, I'd like what I said with LTR was buying at current levels, and like it's 32% stop for this one. It's a little bit larger. Yeah, look, if I wasn't in this one, I'd be inclined just to see whether we get some consolidation while the averages catch up. But if I was on it, yeah, like we've talked about lithium earlier, I'd be inclined to stay here and see whether this builds into something bigger.
Okay, I missed one from Evangeline. The G50, please.
Yeah, there's signs of momentum there. Had that initial move across the averages, then pulled back to it, and now it's rallied well again. So if I was on this one, I'd be happy to stay on it. Not a great deal of history, only goes back to 21, and there hasn't been anything notable about that period. It hasn't been the place to be. It's been a gradual grind lower. Will this turn into something? Well, of course we don't know, but there's where there's momentum, there's always potential. And so that's why I want to stay on momentum and see where it goes, not second guess what's going to happen. And there you go. There goes the doorbell, and there goes the dog. That's going to make the next 15 minutes interesting.
That's the bell to get a move on, because you've got to answer the door, or at least the dog will. TLX,
so this one here, I'd be, if I was on it, great. If I wasn't, it's now too far above the averages. I'd need to see the next consolidation.
All right, fantastic. TLX.
TLX. It's for me. It's still a consolidation of a big rally. It's yeah. If I was in this one, I'd be staying in there with the wide trailing stop. I don't want it to be. I wouldn't want to be seeing too many more new lows whilst we now have the declining moving averages. If it continues to make its way lower, well, then I'd probably have to reassess that. But at the moment, I'd give it the benefit of the doubt. I'd be staying in there. Wouldn't buy it at this point. To buy it, I'd like to see it flip back to the positive side of the moving averages, consolidate and break higher again. That's going to take a little bit of time for that to happen. So it's yeah, for now, I still think we say it's an uptrend and it's consolidating, but let's keep an eye on it.
Okay. SS1.
Yeah, nice breakout in this one. We looked at this. Pretty sure we looked at this a couple of weeks ago, and we had the sideways consolidation into the moving averages, and now we've got the breakout and it's run. So it's probably run a little bit too much for the time being for an entry now. The entry point was probably as it was consolidating along the averages when it immediately after it broke out. But if we get another consolidation while the averages catch up, it could present another opportunity. Certainly one I'd be hanging on to if I was already on board.
All right, fantastic. We'll look at earphones, which is BC8, please.
BC8?
Yep. B for Bob.
Oh, BC8. So gold stock, yeah, it's interesting. The local gold stocks have had quite a pullback, which is fascinating when you consider the gold price has just been compressing into a tight range. I'd be if I had this, I'd be holding it still. It's still above the wide motion trader stop loss, and this could be it could be a shakeout of investors in gold stocks. The gold price isn't giving us a reason to sell gold. Could be a case that this has been a large rally, as we've seen in other gold stocks, and we're seeing the big pullback. This is why I have wide trailing stops to try and see these off. I'd be giving it the benefit of the doubt that the upward trend is still in place, although I wouldn't be buying it just yet. I don't want to buy below moving averages. I want to see some upward momentum return before getting in.
Okay. IPX.
Yeah, this continues to build, rising lows above rising moving averages. I'd be staying with this one if I was on board. Like had I been on board during late last year, I would have been taken out during this pullback. This is more than a pullback. This is quite a substantial correction. Wide trailing stop only keeps you in for so long. So more with this one here for me, it would have been a case of like getting back in, maybe as prices cross back above the averages, consolidate, and maybe I would have had a position from late June, and so I'd still be running that position if that were the case, because it does seem to have the building blocks of an upward trend. My stop would be back below the 100-day moving average. I could probably consider a position at current levels, or wait for the next pullback, see what it looks like. But yeah, I think there's some potential in this stock. Where there's momentum, there's always potential.
All right. Alexandra wants us to look at IKE, please.
Yeah, I've got some of this myself only recently. Fairly thinly traded stock, you can see by just all the dashes and dots on the chart. But there's an upward trend there. Rising lows, rising moving averages. Price data goes back to 2017. But yeah, I think the trends there's a trend in place. I've got some only from recent levels. I'm happy to go with this momentum and see what happens. Wide trailing stop below the 100-day moving average. Yeah, I guess it could even be considered as an entry around current levels, just this little pull back towards the 50-day moving average. So yeah, potential there.
Okay, Jesse wants us to look at BIO. Thanks.
Yeah, potential here from below to above the moving averages, pull back to moving averages are close to crossing. I'd give it a little bit longer, and if we get a bit of price action like such, just getting that sideways price action come in, then I'd be interested in maybe buying a subsequent breakout. So if I was already in it, well, I'd be staying in it. But for me, it hasn't given an entry trigger. Needs those averages to cross and for a break to a new high. But I can see how something could be developing here. There's it's an interesting looking structure. Maybe this has been a big corrective period following a large price increase from 23. One to watch with great interest, I think.
Okay, next one from Mr. Vetpal is DTL.
Not enough for me just yet. We've got the rising moving averages. They've started to turn higher again after this big corrective period. But it's been oscillating either side of the moving averages. I think I just need a trigger. So maybe that would be a break above these recent highs. So we've got the July high just recently and the May high. So if we get a breakout above those, well then I think that would be enough to say, look, there's enough momentum there to say this is worth a go. See whether it can extend. At the moment, I'd probably just be inclined just to watch it, because we have had this seesawing either side of the averages. Nothing to say we can't see another trip below the averages, or then even could turn down. So for the sake of waiting for a few more seconds for a breakout, I'd probably be inclined just to wait for now. But that could be developing.
Okay. Next one from Tinker Table is TMG, which is a penny stock.
Yeah, nice trend there, and I like that it's look at that strong rally and look how it's been holding onto the gain. So that suggests there's that buying interest coming in underneath the market as the moving averages catch up. If I was on board, I'd be happy to stay on board and see whether we can get some more gains. In terms of buying, they're always harder to get these ones. Like even just to have a stop back at the 100-day moving average, you're probably looking at 30%, which is getting on the high side for a stop loss for me. like you could use this recent low from June, but the stock could easily just come back below the June low and then go higher again. So harder one to get on, but one if already on, I'd be happy staying on. I do like this that it has held on to most of these gains so far. That's an encouraging sign. Often we see these ones soar and then flop. That one's not doing this, so that's an encouraging sign.
A following question onto this, it looks like it's got a company that it aligns itself with in the US as well. Would you know how prices on the ASX get affected if a company is duly listed on other exchanges, Jason, at all? Or?
You never know. It's like sometimes Australian stocks want to get listed on the Toronto Stock Exchange if they're resource based. Opens up another pool of potential investors. There can be a lot of excitement on the Toronto Exchange sometimes that can really push a share price. Different companies, different reasons. Often is to increase their access to capital potentially. So how the share price is going to respond, you can't know. You can never know for sure.
Okay, DOW, please.
Great uptrend continues on, and it's been an uptrend for some time. So it'd be a motion trader stock. The wide trailing stop would have seen off. I'm pretty sure would have seen off this period. What's that? 17%. Yeah. So the wide trail. This again, while we use wide trailing stops, sees off this period of uncertainty. When people were panicking in April and selling, it's the wide trailing stop. It's like it flies above the storm and saw it off. Doesn't work every time, I always point out, but it does keep you on a lot of good trends, as is the case here. If I had this one, I'd be continuing to hold it. It's an uptrend. Simple as that. It is elevated above the moving averages. I probably wouldn't buy it today. Theoretically, it should be able to be bought today. It's not like super stretched, and you could say I could have a 14% stop loss on that back below the 100-day moving average, back around this low point from June. My preference is buying breakouts, so I like buying stocks as they're breaking out of ranges. Buying a breakout, it's just my preference for things. Doesn't mean that's the best way. It's just what I like. In theory, buying with momentum, even when it's a bit away from the averages, there's nothing to say that can't work well over time also.
Okay, MVF.
Yeah, well, I'd just be staying out. It's been in a downtrend since May last year. A lot of negativity around the company now. Maybe the worst has passed, but who's to know? It's still got declining moving averages and prices below the moving averages. It could also languish for years. It could get to where it is now. Nothing to say that you can't see price action. Like such develop over many months or a year or so, while it forms a big basing structure, maybe over the next 12 months. All sorts of possibilities, but I wouldn't call this upward momentum. That's just a rebound off the low, rebound back to the moving averages. It's still a stock in a downtrend. I think it takes time for that sort of trend to, in general terms, it takes time for that sort of trend to turn around. So I'd leave it alone.
Michael wants PWR, please.
Yeah, downtrend. It's just a downtrend. It's like this. I do remember it because it was. I think I even had it in my portfolio at one time. Just looking for where that would have been. It might have been around, I don't know, 2022. But the name's familiar. But yeah, it's yeah, it's just been in this long downtrend. Is this a base? It's like there's nowhere to say. Like, what we're seeing now, it's not dissimilar to what we saw. Look at this period through here in 24, where it rallied into the moving averages, came back, tried to rally again, but then it gave way to more losses. Like, there's nothing to say that the same thing's not going to happen now. So I think it's just one to leave alone until we see it above rising moving averages. So that means buying at a higher price. But the benefit of buying at a higher price is that it helps avoid buy something which is still in an unraveling period, which at this point I'd say that's what the odds favour.
Okay. C79.
Did we not look at this earlier? I think we looked at this
We
one.
did. Yeah, we
And
did.
it does have that nice structure, but just go back on that one. It's a nice structure, worth having a look at what we already said.
Yeah, no, we did. There's a couple here that we probably went back. Let's have a look at AMP. We haven't had a look at that one yet. From Silver Sun.
Yeah, this one's moved quickly. Yeah, this has been a hard one. I wouldn't catch this one. It's moved too quickly, just from below the averages to above. By the time the moving averages cross, price is up around current levels. So now I don't. Now I say I don't want to buy it because it's now stretched above the moving averages, and this is going to happen. Like, every stock won't give us an appropriate risk reward or asymmetric entry point, and some are going to run and they're just going to be too hard to get on in a risk managed way. I just watched AMP from the sidelines at the moment. It's it's not an up. I wouldn't call this an uptrend because there's we've got a previous high not too far away. How could this play out? It could play out in many ways. It could stall and then go into a larger sideways trading range, and then next year it turns up. I don't know. I really don't know. I don't see a good structure here. I just see a whole lot of volatile mess. Really, it's been a difficult stock for years and years. It's been like, if it hasn't been downtrends, it's been this volatile trading along the bottom. So I think there are better opportunities elsewhere.
Okay.
That said, if I happen to have picked up some stock at a good level a few weeks ago and I'm up, well, I'll always see where it takes me. But other than that, I find this one a little bit too difficult.
Okay, we've already had a look at WBT. Let's have a look at another brown kids here. RGTI, please. These are the US-based stocks. And we'll finish off with US-based stocks, I think.
Yeah, it looks like it's starting to lift off this base. We've got a breakout. Like, look, I would have been saying, talked about last week. I would have been saying, oh well, yeah, it's trading on the averages, looking for the breakout. But now we've got the breakout. I guess it could be. Where do we? There's different ways to look at it. Do we look at it like linking the highs, or do we just say it's just gone through some resistance points? So either which way, there is a breakout. So a couple of ways we could say, look, let's buy it at current levels, or let's see if there looks to be a bit of a return move at the moment back to the breakout point. Do we see that return move bought, a bit of sideways price action followed by in which case it could be to buy the dip, or then you buy the break above the recent high. So it could be a couple of plays there. Or just say, look, I'm just ready to go now. I'm going to buy it now. I'm going to put a stop. I think it probably requires at least 20%. So you've got to give it back to this breakout point plus a bit of a margin. So to buy now, I think it's looking like a 20% stop. But if I was already in this, yeah, absolutely, I'd be staying on and seeing if it gets going.
Okay. IONQ.
Sorry, what was that?
IONQ. N for Nelly.
it's we're really still in this sideways consolidation along the moving averages. So I'd be inclined just to watch it for a bit more. And I'm watching for that. Like if it's touch more sideways and a break higher, that would be that'd be the entry trigger. Alternatively, if it pulled back, maybe it could also be like a buy the dip situation because we do have that sideways. We've got the rising lows. So having a bid just around what 41, 90ish thereabout, trying to get at the lower end of the range, and then a stop below the 100-day moving average, and see whether this is a consolidation before higher levels. Certainly potential with it. So one to watch.
Okay, we'll finish up our tickers with the biggest company in the world. I think they are now, NVIDIA.
Uptrend. Trend is unbelievable as it may be. The trend is in place and it's making new highs. New highs isn't a sign of a top. It's of course, one day the new high is the top, but odds favour new highs lead to more new highs. So I'd be letting it run, and that's the whole thing we spoke about with the S&P 500. It's like there's an upward trend in place. It's be on board the trend and let the trend run. NVIDIA is contributing significantly to that trend. It's above rising moving averages. It is getting a bit away from the moving averages, so it wouldn't be surprising or unusual if we got a bit of sideways consolidation while the moving averages catch up. But there's an uptrend here. That's simple as that.
All right, well done, Jason. That's one big marathon of stocks you've got through there. We might just quickly finish off on this. I think it's a very good general question. Just as an FYI, before that was an ascending triangle. Silver Sun brought that up. That pattern.
That's the an ascending triangle. That's the name I was looking for. It's been so long since I've pulled out the old chart books. I'd forgotten my descending and ascending triangles.
Me too. All right. So, do you take into account themes that are working in the market, Jason, e.g., rare earths and defence now, when prioritising buy signals?
Do I take themes into account? No, I not really. No. So with my motion trader portfolio, I'm just following the. I'm trying just to follow the signals as they come along. I'm not trying to tilt it one way or the other. In my more discretionary portfolio, I might do that. I might say, look, I want to have a tilt towards gold or uranium or lithium, and that's okay too. I think that the key is not to have a significantly overweight exposure to one sector, because it's all great when it's working, but it's when it stops working that you can get significant portfolio volatility. So if you've got half your capital in gold stocks, looking at like some of the pullbacks in the last 8 weeks, it's like 30% in big stocks. So if you've got half your capital in gold and it pulls back 30%, you're probably pretty unhappy. But if gold's 10% of your portfolio, or even 15% of you, 20% even, it becomes more manageable. So I try not to have an excessive weighting to any one sector. Although if it's a sector which there's an interesting theme which I like, I might have a good look at it and have extra exposure to it, but not excessive exposure.
Okay, fantastic. Well, thanks for answering all those questions. Thank you, everyone, for coming along for another big show this week. It's been great having you here. Don't forget, as always, to like and subscribe. Obviously, Jason has his own YouTube channel over there at Motion Trader as well, so check out his YouTube channel or website at motiontrader.com.au. If you want to check out Selfwealth, it's selfwealth.com.au. But otherwise, thanks, Jason. Thanks for another great week.
Hey, Rog, that's been fun. Thank you. It's been good being back. I'll go see what was upsetting the dog earlier and look forward to coming back next week for another round.
Maybe it was some of those viewer tickers he was hearing, right? So anyway, you go and calm him down, and we will see everyone again next week.